Welcome to the Stage Analysis members midweek video. So I'm going to go through the stage analysis of what's been going on with Celsius as it's attempting a stage 2 breakout this week, and it's actually one of the highest quality stage 2 breakout attempts we've had lately. There's not been many, to be fair, very, very few. So just wanted to run through what was going on with this one and show it in a slightly different way that I haven't shown for a while. And then get on to second part. We'll be looking at we're doing the Chinese and biotech ETFs at the moment have got a lot of interest, so I wanted to highlight those as I was discussing those with a few people on Twitter today about obviously the amount of resistance they've still got and whether they're where they are basically in terms of the stages. I think they're only very, very early stage 1 at best, and obviously moving into resistance zones. So I just wanted to chat through those and show some examples of obviously long stage 4 declines with a very short stage 1 basis. And then going to have a look at the indexes quickly and some of the short-term market breadth before getting into the watchlist stocks that have been coming up over the last few weeks or so. I've merged the main ones together. I'm just gonna run through some of those in a bit more detail and talk about obviously the various long and short sort of areas of interest. So let's get going on this then. So CELH, so Celsius Holdings, which is a soft drink company, I believe, has been in favour recently. There's been a strong price action as it's moved out with a potential stage 2 breakout this week. So I've marked up the weekly chart here for the last few years or so. This is I've added a little bit more time onto this one than I normally show. I normally only show 2 years and 9 months, but I've added because of the video just to stretch out a bit and to actually highlight the original stage 1 base, which potentially attempted to move into stage 2 a few times and chopped around a bit, falling back into stage 1 before eventually breaking out into stage 2. So had a initial failed stage 2 breakout attempts back in early 2020, like many stocks did at the time before the COVID shakeout hit. We had the major stage 4 decline in the market, but very short and sharp, which shook out a lot of stocks. This initial stage 2 breakout here would have failed. So this is the initial stage 2 breakout area. So initial investor stop loss goes under the 30-week moving average and the local swing low there. So that would have got stopped out here. So you would have been out, but then stage 2 started again, basically came back up and through strongly. See the relative volume coming in here, more than 2 times the weekly average by a long way there, then followed through the following week with further strong breakout move. So this is the kind of strong breakout move you want to see with a stage 2 breakout. You want to see good strong follow through initially, and then the pullback. Ideally the strongest ones don't pull back very far at all. You can have a lot that actually go into the backup range. So when you have a stage 2 breakout, you get a move up, and then you'll get a move back towards the breakout level, and then it will start chopping around and then moving higher again that way. But ones that are really strong, they tend to hold up much tighter areas. So as we can see with this one, we had a 4 or 5 week consolidation here, where before it then made a continuation breakout higher. So took a very tight action near the highs there. So as you can see, this was a massive stage 2 advance with over 2,000% from the actual COVID low. I think it moved even further there. So it was actually go from the Wyckoff kind of spring area down at the bottom of the range here from the COVID shakeout. Actually ran all the way, was over 3,000% to the very, very top before it had the change of behavior and started moving back down again. So into the stage 3 up here. So really, really strong stage 2 advance. You can see underneath here at the bottom of the chart, I've got the normal Mansfield relative strength. So this is the stock versus the S&P 500 with a 52-week moving average. So which is what we call the zero line. So you can see at the moment with the current stage 2 breakout attempt here, it's actually back above a flat zero line here and making higher highs in the near term. So slightly better than the price action's doing. You can see the next one is the stock versus its group. So this is against the soft drinks group. So you can see it's just moving through the zero line here. So just turning positive on the RS And then further down, I've got two more here. So the group itself, so soft drinks versus the S&P 500, has been outperforming since the start of the year, and the consumer staples sector versus the S&P 500 again has been outperforming since the start of the year. So this gives us our what I call the SATA rating of 5 out of 5. So in order to get a SATA rating of 5, you need to be, obviously each one of these needs to be outperforming the S&P 500, and we need to be in stage 2. So the fact that we're making a stage 2 breakout attempt, that gets 1, and then these all get 1. So it's got the maximum technical rating at the moment in terms of a quality attributes type thing. So this is something that I came up with a while ago as a way of rating stage 2 breakouts, as we're looking for strong relative strength, not just from the stock itself, but we want to see the stock outperforming its group. We want to see the group outperforming the S&P 500, and we want to see the sector outperforming the S&P 500. So all of those give a really strong technical picture, and you can see that when it's at a 4 or a 5, it's generally in good shape. So if we move on to the daily chart here, so you can see over the last few months, this has been highlighted 7 times now. I did highlight it again yesterday, obviously on the breakout, but it was highlighted in the weekend watch list, and there's been, as it got into this tight area here, I started highlighting it more. And over the last few months, as it's been forming the base, there was this change of behavior move in here where we had this significant bar on the weekly. So if we go back to the weekly chart quickly in here, so started coming up in the watch list on this week here. So we had this change of behavior bar here, big significant engulfing bar, and then it got tighter on the following week there. So I started highlighting it in here, and then it's been gradually come up during the watch list over the last few months, especially in the later part of the base structure. So one of the things about the watch list is I prefer to obviously highlight stocks when they're in either phase C, D, or E. So later in the base structure versus early in the base structure. I only tend to highlight early in the base structure when stocks start to move through the 50-day moving average, or they start to show some tightening action after, like with this one, we saw that weekly significant bar. So because sometimes you can get an earlier breakout within phase B of a base structure, but part of the watch list is to start to show stocks as they start to base and are starting to show some of the characteristics that we look for. The moving averages are starting to get back into line, and the stock is starting to show sort of good quality technical attributes. So this one was meeting those standards and then got really tight up in here in what is phase D of the base structure. So it got highlighted 3 times before the breakout within a week there, and then obviously on the breakout day itself. So that is CELH. So at the moment, making the stage 2 breakout attempt doesn't mean it's going to be successful. It hasn't yet cleared resistance completely, so we've still got this resistance from the December high in here. So you can see on the daily, which it was struggling at a little bit today, could quite easily roll over here and start to pull back in. But if it does, what we'd want to do is to hold the top of the base structure here and start to form in the backup range, so before making a potential continuation breakout. So potentially could form a entry point in this kind of area here on the backup as it starts to turn back up again, or potentially as it makes a continuation breakout higher. Obviously, it could still be an up thrust here. We could easily fall over. This could start to come back in again, start to roll down. If it does do that and turns into an up thrust, then obviously potentially could get short or ball back again as it starts to come back into the range. But at the moment, looking for this to obviously hold the stage 2 breakout and make a continuation move. So be watching to see for the weekly to close strongly. So when we have a stage 2 breakout week, you want to see a strong weekly close with the closing price near the top of the bar. So if we get a squat into the end of the week, then that would be a definite sign of weakness, and it could quite easily fall back into the range then, as this is still a very early stage 1 base structure. As it's moved from into a small stage 4, it moved for I think about 19 or 20 weeks sideways before starting to move back through that 30-week moving average and consolidating above and below it. So turning this overall base back to stage 1 there. So it could quite easily roll over here and still come back down. This could then form a much bigger, obviously stage 3 like based distribution top there. It could turn into a massive head and shoulders and then break down into stage 4 and be off back down to the bottom of the chart again. But at the moment we're playing it on the relative strength is strong. It's outperforming the market. It's making a stage 2 breakout attempt. So that's what we're looking at the moment, and obviously looking for, as I said, looking for strength to continue here, and then for it to make a continuation move back up towards the highs to test that what was that, October, November high there before it made this significant reversal, the reversal significant bar on strong volume there. So obviously a major warning sign, but if it can get itself back up towards the top of the range here, back up towards that $100 level or $110 level there, and then potentially that would then again get into double top territory. So at that point it could be short-term profit taking kind of area, but we'll see. So next up, I wanted to talk about the Biotech ETF at the moment. So I highlighted this one today on the Twitter feed. It's currently in stage 4. There's a potential change of behavior going on though. So the move recently has been stronger than the recent any other rebounds. You can see they've been gradually broadening out. So there's a potential change of behavior going on here. Could potentially be in phase A of a new base structure, and this could be the selling climax into an automatic rally here. So the next expectation from that would be for a secondary test. So if it is starting to form a base structure, and we are, as you can see, we're moving into obviously a resistance range at the moment. So, and I believe the anchored VWAP, the year-to-date anchored VWAP is coming in around this level as well. So it could quite easily fall back into the base, back towards the lower end of the range again, start to chop around. So it might need a lot more time in order to move back into stage 1 convincingly. So at the moment, I feel like a lot of people, especially newer traders, because they started during the COVID stage 4 decline, which was very short and sharp, and a V bottom. They're all expecting a V bottom to happen, but obviously most of the time bottoms don't happen like that. There's the occasional bottom in stocks that are short and sharp, but a lot of the time it's a long drawn out process. So your typical stage 1 will actually move above the 30-week moving average and then start to move back above and below it, and the 10-week moving average will move back above that and chop around, and you'll build a much larger base structure. Sometimes in a higher position, doesn't necessarily have to form in the lower end of the range. There's been, as we can see from the inverse version here, you can get this kind of pattern like that we see here, and then we've got this lower base structure forming. So you can get that in reverse where you have a sharp move at the bottom, back up, and then we start to form a higher base structure before moving up and out. So it doesn't necessarily all have to form in a perfect base at the bottom of the range here underneath this declining 30-week moving average. So, but with this kind of long stage 4 decline, you can tend to have a lot of overhead resistance. So one way you can look at that overhead resistance when you don't have clear levels to look at, we do on this have some reasonable levels, is you can quickly add an Ichimoku cloud, which on the weekly chart, which gives you some idea of where it is. So the best stage 2 breakouts occur above the cloud resistance here. So as you can see, we're above cloud resistance. We had the COVID shakeout was a bit of an anomaly. I can never say the word, but you can see the stage 2 decline advance obviously happened all above that Ichimoku cloud, and that tends to be the case with the best stage 2 breakouts. So at the moment you can see after the deep stage 4 decline that we've had, we're a long way below this cloud resistance. So this could need a lot of time to obviously build a base structure before it can eventually move up and out into stage 2. Similar thing in the IBB, slightly better relative strength in this one. So again, if I add the cloud to this one, you can see it's still a long way below its cloud resistance, and for the better stage 2 advances happen above the cloud. So Similar thing going on in these Chinese ETFs. There's a bunch of these that I posted the other day. So FXI, KWeb, I can't remember the other ones, MCHI maybe off the top of my head, but they're making the similar sort of pattern. You can see we're in a stage 4 decline at the moment. So topped out in stage 3 up here. So you had a little bit of a head and shoulders type top on this one before breaking down into stage 4 here, then continuing making lower base structures here on the way down in stage 4. We had a little bit of a short covering rally here, so significant reversal bar. So start of a potential base structure forming at the moment. So, but it's as I said, you don't necessarily have to form. Base structures don't always form in a rectangular sideways pattern. You can sometimes have obviously a selling climax or a buying climax into the high that then comes off, and then you can start to form a higher base structure. So potentially this could do that, as it did have a deep selling climax in this one. You can see the relative strength has been outperforming recently since May, so that's why this has been coming up with a lot of the shorter term traders on Twitter. I've noticed they're getting very keen over the last few weeks, as obviously it's been up for the last 6 or 7 weeks or so, but it's moving into an area of resistance, and this would only be considered early stage 1A at the moment. So it's only just coming out potentially of stage 4 and potentially starting to move into stage 1. Doesn't mean it can't still test the lower end of the range again down here, as a much broader stage 1 range could develop. But at the moment, this is only stage 1 at best, and so it might need a lot more time to develop. So again, if I quickly show you the Ichimoku cloud on this, so you can see there's strong cloud resistance above it. So you're generally not in a good position. You want to see it moving out above this area, getting out into the clear and past that sort of time-based resistance. So another one is KWeb, again very similar. Looks like it had a deeper decline, similar kind of selling climax down here with a significant reversal bar and attempting to make a new base structure, but it's only just getting back above that 30-week moving average, and the 10-week still below. So again, this looks like it needs much more time, just moving into early stage 1 at the moment. So I did post a chart back from 2012, so a lot of people didn't notice the date when I did post it, but this is back from March 2012. So as an example chart of basically when you're looking, as there's a lot of charts like this at the moment, so I kind of wanted to labour the point and get people to think for themselves, as it was one of the early mistakes that I made when I was using stage analysis. As you look at the chart that was in the book with obviously your typical sort of bell curve type pattern, like stage 1 into stage 2, 3, 4, and back into 1 again, and you see that big sort of bell curve pattern. And then you kind of ended up looking for stocks that looked like that. But it's actually, as I've talked about many times on these videos, it's kind of the opposite to what we want to look for, because you don't want to have a big stage 4 decline that has given up the entire stage 2 advance. So you only want to, if you've had a good strong stage 2 advance, you want to have a small stage 3 top, and then you want to have a small stage 4 decline that doesn't give up more than half, ideally, of that original stage 2 advance, and then starts to form a new base structure, as that way you can have a much shorter base structure in stage 1 before it can then break out again and then potentially move off back to new highs, whereas something that's come all the way back down to here is going to need a much longer base in order to then start moving back up again. So it needs a lot more time to work out than something that's only pulled back half of that original stage 2 advance and is making a much bigger monthly move basically on the longer term time scale. So if you're looking at charts that are down here and just having short, sharp rallies in here at the moment, then these are going to take ages. You could have a base that, if you've had a 1 year stage 4 decline, then you're generally going to need a 1 year sideways stage 1 base in order to move back to where you were before. So it can take a long time. So reason I posted this the other day is that it was a good example of, you would look at these kind of charts when I was first. This was actually potentially one of the ones from back in the time when in 2012 I would have been interested in this kind of chart. But nowadays, I know that it's actually the opposite to what I want to be looking for, as obviously this has had a really, really large stage 4 decline. So it broke down into stage 4 and then gave up 65% and was from the original highs there, it was off over 70%. So obviously tallies in with what we're seeing at the moment. There's a lot of stocks off 60, 70, 80%. And then starting to make base structures within stage 4 that then potentially turn into an early stage 1 base. So while this is a stage 1 base and while this is a stage 2 breakout and it was on strong relative volume, you can see the relative strength was starting to improve, but it was still below a declining zero line. So this is another point that this is one of the reasons why I don't use the flattened Mansfield relative strength line, is that the angle of the zero line, which is the 52-week moving average of the relative strength line itself, actually gives you an additional piece of information. If this is still declining and the relative strength line is still below it, then it's too early. It means it's got too much resistance above still, and it's not outperforming. And it's going to take a while to outperform. So we move on to the follow-on chart from this. So as I said, it looks great in hindsight. In sort of when you look at it, first of all, we've got a little inverse head and shoulders type pattern going on, a little bit of contraction at the end, and then a strong breakout. And it was a strong breakout, and it closed near the highs, and it was strong on the strong volume. So it could make some progress here, but we have got this significant sort of bar here and major stage 4 decline all through this area. So there's a big resistance area through here, as well as obviously the original breakdown area up here. So I'll show you the follow-on chart. So this was the point of that chart, so where it broke out. So you can see it did run for a couple of weeks. It did have a good run for about 3 weeks, up another 20%. So you could have made, obviously, swing traders, can slim type traders that take profits at 20 to 25%, potentially could have got in at the breakout point, and obviously at the very low of the breakout point, they could have got a 33% move up there. So the ones that take profits on the 20 to 25% area, they could have got that short-term trade in and then got out for a profit and then be away. And as you can see, this then broke off back down and closed back below. So when you have a stage 2 breakout, as I said, you get it goes below the 30-week moving average and the swing low of the breakout. So would a initial investor stop loss would have been down this kind of area. So this would have got stopped out after a couple of months here, as it moved back through that 30-week moving average and undercut that. But obviously this kind of price action where it came all the way back in again really strongly would have probably put you off, and you probably would have got out a little bit earlier than that anyway. But as you can see here, what I was trying to label with, if I put the cloud on again, just so you can visualize this sort of resistance area, as it's when you have a big stage 4 decline like this, there's no like horizontal areas to go against. So you can just, from the actual depth of the decline and these strong bars, they provide massive areas of resistance. So you can see this rallied up into that resistance area and then started to fall apart and come back down again. And then obviously 2 years later, it's still going, well, over a year later, it's still going lower, and potentially it could obviously start moving back up towards again. And I think it did start to make a new stage 2 breakout, but then you've got this massive area of resistance that's then formed. So I'll quickly move this on. You can see it did start to continue to grind sideways. You can see how that resistance is finally starting to thin out a bit, and we finally get a breakout above the resistance zone here. But you do still have obviously these areas of resistance where it's gone sideways, and they're gonna play into for a long time basically. So you can see it didn't start moving in earnest into stage 2 for a very, very long time. It was years later basically until we finally got a major move into stage 2. So hopefully that helps you understand that when you see this kind of pattern, which you're going to see a lot of in the coming months, is that it's not a good pattern. There is a lot of problems with this, and although you might make some stocks will go on and get get back up to their highs again, the vast majority of these kind of moves will fail. So it's not a high quality setup compared to what we were showing earlier with the likes of CELH at the moment, which is a much higher quality setup. Again, could quite easily fail. They all fail, but they don't necessarily, nothing's guaranteed. But obviously we're looking for the stocks with the higher quality technical attributes. So when you've got major long-term, like major stage 4 decline, it creates a massive resistance zone, and so that is going to make running a stage 2 advance much more difficult. All right.